Welcome to Forex School Uganda. I am Godfrey. Today, I want us to take a look at the Dow Jones or the US30, which is an index or an index. We are going to do a top-down analysis to see where price is at right now, where we anticipate it to get to in the next coming few hours or a few days. Now, if you're new to the channel, kindly subscribe, like and share the video, and turn on the notification bell so you are alerted every time I post new content, so you can get to watch it at its earliest. So we're going to delve into this US30, which is an American index or an index. So from the monthly time frame, we see that price was able to break and close above this resistance area. And now when resistance is broken, it becomes support, and we see price retesting it right here, and this level held its ground and was able to push price back to the upside. Then moving to the upside, it's forming what we know as the impulse correction and impulsive formation in the market. One thing to take notice of is that price has been making a series of higher highs and higher lows. This is a higher high, a higher low, and it's now in the process of completing the new higher high. Now when price is making higher highs and higher lows, it is technically trending to the upside. So the structure of the market, as far as the monthly perspective is concerned, is bullish. So we are going to drop down to the weekly time frame to see what perspective it gives to us. Now, this is the weekly time frame. I also want us to dissect it a little bit. So what we see in this weekly time frame is that price previously was making a series of lower lows and lower highs. It's a low that is lower than the previous low. This is a high that is lower than the previous high, making it a lower high. This is a low that is lower than the previous low, making it a lower low. And so the sequence continues with price making lower highs and lower lows. But right here, it made a high that was higher than the previous high, but just as quickly as it did, it dropped and broke the low to leave the structure of the market intact. But then it came right here and broke it again before it retraced a little bit. And from then on, it's been making a series of higher highs and higher low, higher high, a higher low. When it got to this area here, it started consolidating between these highs and these lows here. One thing to notice is that price was making a series of higher highs and higher lows. This being a new high, this being a new low, but a low that is higher than the previous low right here, or this one down here, which is the most clearest. And now price is in the process of completing, or in the process of forming a new higher high. Now when price is trending to the upside, it's basically forming higher highs and higher lows. So the structure of the market, as far as the weekly perspective, just like we've seen the monthly time frame as well, is bullish. So I want us to focus on what happened within this area here. We see that price, after ranging between this high and this low here, it finally was able to break out. But just as soon as it broke out, it was quickly repulsed to the downside, and it dropped heavily to the downside, leaving behind a long rejection wick on the upside. Coming back into these lows here, and it closed down here. However, when you scroll to the left, you realize that there's no high in sight, or there's no rejection area or resistance area in sight. So question would be, what was this candle rejecting that caused it to have this long rejection wick to the upside? Now, if there's no resistance area in sight or resistance level in sight, we wouldn't term it as a really clear rejection, much as it's a rejection of higher prices. However, the close or the formation of the candle gives us certain kind of clues of what price is intending to do. And now the fact that this wasn't really rejecting any clear resistance area, wouldn't regard it as a rejection wick or a rejection tail, but rather would take it as a wick that is to be filled, or a tail that is to be filled by price. So it should be able to act as a magnet for price to pull it from the downside back to the upside, to fill the gaps that were left within this wick here in the lower time frames, while price was retracing to the downside. Much as on this weekly time frame, which is a higher time frame, it looks like it's a rejection wick, but really indeed it is not. And so after this breakout to the upside, we saw a retracement come down into this support area, and now after touching this support area, we see that price is beginning to bounce off to the upside. And so the fact that price has been held to the upside by this area here, this level of support, it means that price, the structure of the market is intactly bullish, and so our perspective remains bullish from the weekly time frame, and so does our bias. So we'll drop down lower to the daily time frame to see what perspective it also gives us. But as it stands right now, we see that the monthly is bullish and the weekly time frame is also bullish as well. So this is a daily time frame. We see that price was ranging between this high here and this low right here, but we see that on the last leg to the upside, price was making a series of higher highs and higher lows, higher high, and it's now just completed forming the new higher low. So it's now just started the new process of forming the new higher high, and so we wouldn't be expecting anything to stop it because of the fact that it's been making a series of higher highs and higher lows. And so this should be a new leg to the upside to complete the new higher high, as has been the case with the previous days. Also notice, we see that price, while it was moving to the upside, it broke out impulsively above this resistance area to form a new high, and now we see it retracing back into this previous resistance area, now turn support, and support held its ground, rejecting price at these lows right here. And now we see that price is in the process of the formation of the next impulsive move to the upside. Remember, price does not move in only one direction, it moves in a series of waves. And right now, after this impulsive move to the upside and the retracement, what else do you expect to see of price? We expect price to move to the upside to create the next impulsive phase so it can complete the formation of the impulse correction and impulsive move in the market. So our bias as far as the daily time frame is concerned is also bullish. The other thing to notice is that price was able to break above this minor resistance area that was formed by price while it was retracing into this support area. And so the fact that it's broken and closed above this support area, we should be able to see price come at least to retest these highs right here. Looks like a small range on the daily time frame, but when you get down to the lower time frames, it's really a very big range that you can really take advantage of in the lower time frames. For swing trades, especially on the 4-hour, maybe down to the 1-hour time frame where you could get day trading opportunities, and maybe further down to the 30 minutes and the 50 minutes time frames for quick scalps. We could actually see price retrace a bit to retest this support area, and once it holds, there's no stopping price coming into these new highs here to test this resistance area up here. So I want us to drop down to the 4-hour time frame to see what opportunities it might give to us, and also see what perspective it actually gives to us. What's the structure of the market as far as the 4-hour time frame is concerned? Because, according to the higher time frames, the structure is solidly bullish. But what exactly is the lower time frame, especially the 4-hour time frame, which is the median time frame between the lower time frames and the higher time frames, which is an ideal time frame for swing trades? Let's see what exactly it tells us before we can begin preparing ourselves for whatever course of action we intend to take based on the price action that we might see happen or form in the lower time frames. So looking at this 4-hour time frame, we see that price previously was making lower lows and lower highs. It's a new lower low, and right here it formed what appears to be a double bottom, or appears to be like a W pattern with this move to the upside. But then we see a correction to come and retest the neckline, and price held its ground at this support area, and now we are likely to see another push to the upside to come at this size right here. However, we could see price first drop to retest this support area once again, and once it's able to hold a second time, then we might see price come to this top of the range. But first we'll see what price does if it gets back down here, or if it is to break free from this kind of consolidation that it seems to be in the midst of, minor consolidation that it seems to be in the midst of, whatever kind of reaction that it gives to us where it is right now, or once it drops back again to these lows here for a secondary test, action of price within this area or right up here will determine for us what kind of reaction that we have towards price action, and that's what makes us price action traders. But by all accounts, price should be moving up to this size here, and we'll be sitting and preparing ourselves for such moves as and when they do happen. Now, looking at the order flow analysis, which is the COT data, or the commitment of traders data, we see that the previous filing was 30,000 long positions, but the latest filing was 25,000 long positions. Now, there's something to notice here, that much as this is a decrease, well, let's first go into some bits of details here, looking at the shorts as well. The shorts previously, the previous filing were 15,000 positions, but the latest filing of the short positions was 14,000 short positions. We see that 4,000 long positions were closed and only 752 short positions were closed, meaning that they are closing less of the shorts but more of the longs. Now, that could actually be deceptive in itself, because it might appear like they are closing off their longs and instead increasing their shorts, which would bring actually prices lower. No, that's not the case. This happened, the decrease in the positions of longs came as a result of, if we could just go back here to the daily time frame, you can see that this was during a retracement. This happened during this retracement, that the positions of longs were being cashed out, but it's entirely because price does not move in one direction. Look at this. You see, there's this resistance area that had been created, that price had formed in the market. Now, it had broken impulsively above it to the upside, but it had to retrace. There were some gaps left in the market that had to be filled, and so the filling of such gaps had prices drop to the downside. And now for price to drop to the downside, some longs had to be taken off the table. They had to cash in. And so that's why you see the long positions being closed off at a much higher rate than the short positions. But it's not that demand is coming down, but rather it was just this retracement after the impulsive move to the upside. Now we see that price is currently bouncing off this support area, and we should only see prices rise to the upside, which in the next filing should have the positions of longs increasing and the short positions decrease even more. But overall, you can see that the longs are way much bigger than the shorts, and when you look at the open interest, it's clearly net positive, and it's really good, close to 6 figures as an open interest. When you look at the net positions, they are net positive with 11,366 positions, which means the trend is still intactly bullish. Now we should see a rise again to the upside after the short correction following an impulsive move to the upside. So that's analysis for today, and if you're new to the channel, kindly subscribe, like and share the video, and also remember to turn on that notification bell so you are alerted every time new content is posted on the channel.